In this video, I will teach you how you can use fundamental analysis the right way in Forex trading. My name is David Wekulo. I am a currency trader with more than 7 years trading experience, and I'm also a portfolio manager. I've been in this industry for a while, seeing all the different strategies and different ways of trading. I have come to realize that fundamental analysis is what actually gives us the overall trading direction, and fundamental analysis is totally different from trading the news. Just like some people will just go to Forex factory, see one thing and try to place a trade. That is almost like gambling. If you have seen somebody who worked in an investment bank like Goldman Sachs, or those people who trade in hedge funds, nobody trades using pure technical analysis. So if you are planning to make Forex trading a viable career that you can trade any amount of money, then you must have a fundamental framework for trading. And I'm going to teach you the basic things that you need to look out in your Forex trading. When you come to the fundamental analysis, look at the agenda for today. We will look at GDP, then we'll look at inflation, central bank balance sheet, then we'll look at interest rate. You see interest rate there, unemployment rate. You need to analyze unemployment rate as well, retail sales. After this, we'll look at the notable events that are going to act as catalysts this week. Then we will draw a framework and get a trading bias. And after that, we'll go into the chart and look at one or two trade setup for the week. This is very important. If you're new to the channel and you're looking for a viable community where you will come to learn how to trade and get free trading setup, just click on the subscribe button and be a part of this community. On this channel, I share some free trading setup. If you look at previous videos, you will see some free trading setup. I also do live trading here. I show you real trading using a live account so that you can follow along if you want to make trading a full source of income for you. So click on the subscribe button and be a part of the community. All right, and without wasting time, let's go. So the first thing we are considering today is GDP. And what is the relationship between GDP and currency value? If you want to look at the strength of a currency, when you see an economy that is doing well, an economy that is performing, a country that has a strong economic growth, it shows that the GDP of that country will be growing. And when GDP is growing, the value of that currency tends to grow alongside, because the value of a currency is directly proportional to the GDP of the country. Okay, so when there is an economic decline, the value of the currency tends to decline as well, because there will not be too much demand for that particular currency when the economy is not performing well. So looking at GDP, you see here that GDP of US started from 2.3%, it got to 2.4%, then the last quarter it dropped to minus 0.3%. Okay, this might be due to all the Donald Trump tariff and all that. Then in Switzerland, you see GDP also declining from 0.4 to 0.2. In Japan, we also noted a 0.2 decline, a drop from 0.6. While in Australia, we see GDP growing. In New Zealand, we see GDP grew to 0.7 from previously where it was at minus 1.1%. In Canada, you saw GDP growing. In Great Britain, GDP grew a little. And in the Euro area, we saw a slight drop in GDP. From GDP now, you are seeing that Australia is having a good GDP growth. It shows GDP will contribute to the strength of the Australian dollar, but GDP is not just what you have to look at. Now, the next thing you have to see here is inflation. And I would like to keep this thing as simple as possible. How does inflation impact on the value of the currency? When you're analyzing inflation, all the major central banks of the world, they like to keep inflation around 2%. When inflation is around 2%, the central bank will be happy. But when inflation is above 2% and is growing, it is a threat to the economy. So the central bank will do whatever it is possible in their hand to bring inflation back to 2%. And when inflation is below 2% and is dropping further, that is, the economy is experiencing a deflation, central banks do not like this, because the role of the central bank are twofold. Number one is to ensure that inflation is brought under control and people have enough jobs. So they monitor economic growth, job performance, and then they look at inflation. So they try to keep inflation within 2%. So what do you see when the inflation is above 2% and is growing? What action do you think the central bank will be doing? They might want to hike interest rate, because when they hike interest rate, there would not be too much borrowing. Companies will borrow less, and then inflation will begin to come back down towards 2%. So we use inflation as a barometer to measure the actions of central bank. When you observe in the US, inflation has been above 2%. But if you compare the last 3 months, you can see inflation dropping back towards that 2% mark. This is a positive sign. It might cause the Federal Reserve Bank to begin to cut interest rate. Remember, President Trump has been mounting pressure on the Federal Reserve Bank to cut interest rate. And what we are seeing here with inflation is a positive sign. Now, if you look at Switzerland, their inflation is well below 2%. So the Swiss National Bank has the responsibility to try to push inflation back to 2%. And this is what we are seeing. Even last month, it dropped from 0.3 where it was to 0.0, which is not really a good sign. If you look at Japan, inflation is above 2%, but is tending back towards that 2% mark. While in Australia, it is above 2%. In New Zealand, it is tending down towards 2%. In Canada, it has dropped below 2%. Now in Great Britain, it is growing above 2%, well above 2%. In fact, the last reading that came was around 3.5%, which is something that can lead to the strength of the Great British pound. And why is it so? Because if inflation is growing, then the Bank of England will not want to cut interest rate further. Because if they keep on cutting interest rate, what do you think will be happening to inflation? A lot of companies will borrow more money, there will be more economic growth, and when there is economic growth, it will lead to more inflation. So look, you can note this very well. Now in the euro area, inflation is around 2.2%, so it's getting close to the 2% mark. When it comes to interest rates, look at it, all the other central banks are cutting interest rate, but the Federal Reserve has not cut interest rate for a while. So you can see here, Federal Reserve has their interest rate at 4.5%, but there is a pressure. We don't know if they are going to cut it by 25 basis points or they're going to cut it by 50 basis points, okay? But there is an expectation that the Federal Reserve might want to do that. When it comes to Switzerland, interest rate, they cut their previous interest rate to 0.25%. And remember, they have the responsibility to try to cause their inflation to grow back towards 2% mark. So you might see further cut in the Swiss National Bank. While in Japan, you see interest rate at 0.5%. Then Australia is cutting interest rate from 4.1 to 3.85. New Zealand has been cutting interest rate, and even this week there is a projection that they might want to cut it further by 25 basis points. In Canada, you see interest rate has been at 2.75%. In Great Britain, there is a decline in interest rate from 4.5 to 4.25. Now, another point you need to note, they cut interest rate from 4.5% to 4.25%, but now they have a responsibility to also control inflation, because inflation is spinning out of control. They cannot do a hawkish cut at this time. They might just do a dovish cut. That is a cut that they have to consider the implication of inflation first, and it's not going to have significant impact. Okay, then you have the Eurozone. Interest rate was brought from 2.65 to 2.4. What you also need to understand is that an economy that is cutting interest rate seriously, the value of the currency tend to follow along. But in these instances, you can see what interest rate is doing. Next thing we have to consider is unemployment rate. If there are not enough jobs in the economy, they might lower interest rate for companies to have access to more funding. And when there is more funding, then more jobs will be created. Look at here. For the United States, unemployment rate has remained around 4.2. In Switzerland, unemployment rate is growing. It's around 2.4. It grew from 2.7. In Japan, unemployment rate grew slightly from 2.4 to 2.5. While in Australia, it has remained stable at 4.1. In New Zealand, it has remained almost stable at 5.1. While in Canada, it grew from 6.7 to 6.9. Because unemployment rate is growing, what do you think the Bank of Canada will be doing to their interest rate? Will they keep on cutting interest rate, or they will hold their interest rate? That is a question that you should ponder upon. Then you see Great Britain, unemployment rate grew from 4.4 to 4.5. Then in Euro area, it is around 6.2. That is for unemployment rate. Now, central bank balance sheet. I just want to go straight. This is not a deep training. Okay, if you want a full training, it is in the Weldds Forex Academy. We'll show you all that, but I am giving you an overview of the things we look at. And remember, very soon we are going to add all these things together and create a trading bias. So now, looking at central bank balance sheet, the relationship between the central bank balance sheet and the currency value. When the central bank balance sheet is dropping, the currency value tend to increase. It's inverse relationship. If central bank balance sheet is growing, if central bank balance sheet is dropping, currency value will be growing. And if you look at it here, US had a decline in their central bank balance sheet. Switzerland had a slight increase. Japan had the greatest decrease, which is around minus 12.7%. Australia had a slight decrease. New Zealand had a slight increase. Canada had a slight increase. Great Britain had a slight decrease. Euro area also had a decrease. And there are calculations we do in the background to arrive at the trading bias. Okay, and next you have retail sales. We analyze retail sales just the same way that we do to inflation. The relationship between the retail sales and inflation is almost the same. If retail sale is growing, it shows inflation will also be growing along. And what would you think will happen to the actions of central bank? Whenever you meet any of these indicators that we are looking at, always ask yourself, if this value is growing, what is central bank going to do to control this? Are they going to cut interest rate, or are they going to hike interest rate, or are they going to hold interest rate? So whatever makes central bank to want to hike interest rate will cause the value of that currency to increase. Whatever makes central bank to want to cut interest rate will cause the value of that currency to begin to decline. And when central bank holds interest rate and others are cutting, you know that you will trade in favor of the one that is holding, not in favor of the one that is cutting. And that is what you see here. In US, retail sale dropped. In Switzerland, it increased slightly. In Japan, it dropped. In Australia, it increased. In New Zealand, it increased slightly. In Canada, it increased significantly. In Great Britain, retail sales increased very significantly. The same way with inflation. And in Euro area, it dropped. Okay, so that is for retail sales. Now, having looked at that, another thing we also want to consider is hedge fund sentiment. This hedge fund sentiment is not really macroeconomic analysis, but it tells us what the institutional traders are doing. When we are talking about institutional traders, we are focused on hedge funds. Hedge funds have the same goal with we retail traders, but they trade in volume, in higher volume of money. They trade in billions of dollars. Okay, so when the hedge funds are buying a particular currency, you want to align your retail position in the direction of the hedge fund. But one of the drawdown of hedge fund sentiment is that hedge fund sentiment comes out every Friday and it shows you what has happened previously. So most of the time it is a lagging indicator, and you should not just depend on the hedge fund sentiment. You also have to combine hedge fund sentiment along with retail sentiment. Okay, so for hedge fund sentiment, the hedge fund increase their buy positions on the US dollar, they reduce their sell positions on the Swiss franc, they increase their buy positions on the Japanese yen, and Australia they left it the same. In New Zealand, there was a significant sell-off of New Zealand dollar. They are selling the Canadian dollar as well. They are buying the Great British pound, and for them to be buying the Great British pound, it actually agrees to what we have seen previously when it comes to their inflation and all that. Right then, if you look at this other chart, shows you the change in hedge fund sentiment. We are comparing what they did last week compared to the last reading. So compared to previous readings, you see that they increased their buy positions on the US dollar by 14%. They increased their buy positions on the Swiss franc by 31%. For Japanese yen, it was just around 8.25%, while they dropped their positions on Australia by 5.7%. For New Zealand dollar, it was a 120% drop compared to how they performed previously. In Canada, they sold Canadian dollar. For the Great British pound, they did not add much to their positions, okay, but they are trying to keep their positions stable, while they dropped the euro by 66.67%. Now that we have looked at all those things, how do all those things make sense to us if we cannot put all of them together? The Weldds Macro Tracker is something we developed that help us to analyze all those macroeconomic data that we have looked at, plus other ones. And at the end of the day, it prints out the overall economic health of the 8 most traded economies. And if you look at it here, this was updated on the 26th of May. And when you look at overall economic health, the United Kingdom is performing better than any other one. Okay, the second one here when it comes to overall economic health is Australia. So we expect the British pound and the Australian dollar to be very strong this period. Now you look at the bottom two, you see that the overall economic performance of Swiss franc is 36, while that of the euro area is also 36. So the two strong economies are the British economy and the Australian economy, while the two weak ones are the Swiss economy and the euro area. Now that does not mean that these economies are entirely weak, but relative to other ones, if you look at this area, it shows the improving conditions, and the improving conditions look at how they are performing now compared to how they did last month. And if you see, the United Kingdom has performed better by 18.03%. It has improved in economic performance, while Australia has improved by 13.11%. US is number 3, but it has declined compared to how it performed last month. While if you look at here, the euro area has dropped by 26.5%, 53%, while Switzerland has dropped by 11.28%. Canada has dropped as well, while Japan has dropped. So when you add these things together, you will arrive at the trading bias. For this new week, we are looking at taking a sell on the euro against Australian dollar. So we'll be selling that currency because the euro promises to be weak, while the British pound promises to be very strong. Okay, then you look at this other one, euro GBP. We will also be looking for sell. We are trading in favor of the pound. Here we are trading in favor of the Australian dollar. While the buy opportunities we should look at are the pound against Canadian dollar. We'll be looking for buy opportunity. Pound against Japanese yen, we're looking for buy opportunity. Pound against Swiss franc, we'll be looking for buy opportunity. Australian dollar against Canadian dollar, we'll be looking for buy setup, while Australian dollar against Swiss franc, we'll be looking for buy setup. This does not translate to trade signals already. There are other things you have to look at when the trades are ready for you to take. You also look at retail sentiment and then the technical analysis. What are the events that will cause significant movement in the market? On Monday, May 26, we do not have much economic data coming up. On Tuesday, the market will be slow as well, not much economic data. While on Wednesday, which is 28, we have Australian CPI, and then in New Zealand, we'll be seeing their cash rate. The Reserve Bank of New Zealand is expected to cut interest rate. Then on that same Wednesday, we'll be looking at the Federal Open Market Committee minute. Okay, the minute will tell us what the Federal Reserve might be doing when it comes to expectation of rate cuts. And then on Thursday, what will move the market is US preliminary GDP. Then also the Bank of England governor will be speaking. On Friday, we'll be looking at Japan unemployment rate and retail sales. Then we'll also look at Canada GDP. Those are the factors that will move the market. The fundamentals have already told you the direction that we expect those currencies to trade toward in the next few weeks. So whatever method that you use in your analysis, whether you are trading with indicators, whether you are using SMC, whatever method, whether you are trading with Elliott wave, okay, whatever you are using Gartley method, whatever approach you use, you should look for trades in those directions, and the probability of those trades hitting your take profit are higher and when you are just trading the technicals blindly. All right, if you want to know more, then I encourage you to join the Weldds Forex Academy. If you're new to the channel, why not just to take a moment and click on the subscribe button and be a part of the community. Thank you for watching. See you within the week. I'm going to post a detailed video of what are the setups that we are taking so you can trade along with us.